Good afternoon, everyone. I welcome you all to the Indian MSME sector, opportunities and challenges for the next 5 years. An insightful webinar to celebrate the World MSME Day 2024, presented by SMERA Ratings Private Limited, a wholly owned subsidiary of Acuity Ratings and Research Limited. I am Anthony Jose, Chief Rating Officer and Executive Director, Acuity Ratings and Research Limited, your host for today. We thank you all for joining us as we celebrate the World MSME Day today. India is home to 6.3 crore MSMEs. Over 4.6 crore from these are registered with UDYAM, who create over 12 crore jobs and contribute to over 29% of our GDP, 36% of our manufacturing output, and over 40% of total exports. SMERA, the world's first SME-focused rating company, is committed to building trust, promoting transparency, and facilitating lending decisions. SMERA empowers the MSME ecosystem and has already served over 60,000 MSMEs since 2005. With these thoughts, let us now delve deeper into the MSME sector. To provide you with invaluable insights, we have a battery of experts to guide you with relevant insights and help you stay ahead of the curve. We warmly welcome Sri Ravi Tyagi, Chief General Manager, SIDBI, as our keynote speaker and panelist. Welcome to the Indian MSME sector, opportunities and challenges for the next 5 years, Tyagi-ji. SMERA also welcomes all our panelists, Ms. Natalie Nicolaou, Senior Financial Sector Specialist, the World Bank. Welcome, Ms. Nicolaou. Mr. Sudarshan Chari, MD and Head, SME, DBS Bank, India. Welcome, Mr. Chari. Mr. Uday Shankar Majumdar, CGM and Group CRO, Canara Bank. We welcome you, Mr. Majumdar. We also have Mr. Shankar Chakrabarti, Non-Executive Chairman, SMERA Ratings Private Limited, and MD and CEO, Acuity Ratings and Research Limited as our panelist. Welcome, Shankar. Finally, we have Mr. Suman Chaudhary, Chief Economist and Head of Research, Acuity Ratings and Research Limited, as our moderator. Welcome, Suman. I once again welcome all our dignitaries and participants and thank them for taking time out and joining us in celebrating World MSME Day today. We have a short agenda for the evening, starting with keynote address from Sri Ravi Tyagi. This will be followed by a short presentation by SMERA. After the presentation, we will have an interesting panel discussion, followed by audience Q&A before we close the session. We request all our audience to utilize the chat box feature on the system to share their questions. We will take up as many questions as possible, and the ones we cannot address on this session, we will take offline. Let us move to the first item of our agenda, the keynote speech from Sri Ravi Tyagi. Allow me to introduce him. Sri Ravi Tyagi is Chief General Manager at SIDBI, the principal financial institution for MSME sector in India. With more than 28 years of experience in financing the MSME sector, he has been responsible for development of several major credit and risk capital products at SIDBI. Currently, he leads digital initiatives of SIDBI and has been responsible for major digital programs for MSME ecosystem like PM Swanidhi scheme for street vendors, UDYAM Assist platform, GST Sahai, Fit Score, Prayas lending scheme, and so on. In the past, he headed the SME exchange project of National Stock Exchange and also served as CEO of SIDBI Venture Capital Limited, a SIDBI's equity arm. He is also chairman of the board of Online PSB Loans Limited, a fintech jointly promoted by a consortium of domestic financial institutions. Over to you, Tyagi-ji.
Thank you, Anthony, and good evening to everyone. My heartiest congratulations to all the SMEs of the country, MSMEs of the country on the World MSME Day. And I'll just request Hardik to just put on my screen if you can do that. So it will be very relevant for us to today understand the UN message. UN has a message for a theme message for the SME Day for 2024. Yes, please. So the UN message is for all the countries in the world to leverage the power and resilience of the MSMEs to accelerate sustainable development and eradicate poverty in times of multiple crises. Now, the message is a very clear indicator that there is a global acceptance of the fact that MSMEs are one of the key, most important economic entities in a country. And their growth, their existence results in growth in economy of the local economy, employment, wealth distribution, and innovation in that country. So we all knew this fact, but I think there is a greater global acceptance and recognition of this important fact. Further, I think last 4 to 5 years, we have all witnessed multiple global crises. We've seen the pandemic, we've seen geopolitical tension, we are seeing wars, we have seen climate events. And once more, there is a now conviction that during all these multiple crises, one segment which could be very, very resilient continuously was the MSME sector. Probably because the entrepreneurs and the MSME owners themselves are very nimble-footed, they adapt faster to the changes and somehow have that survival instinct. So therefore, there is a very, very widely and very welcome recognition throughout the globe for the MSME sector. Yes, please. So it will be very good for us to now understand what is the MSME ecosystem of the country and of India. India has been blessed to have one of the biggest MSME sectors. We all know about that. India has a very, very big SME sector. And let's start with the GST registrations. Now, these are 97 lakh numbers. These numbers are a bit dated. These are last year numbers because that was the time when GSTN published a 6-year progress report on GSTN. So these are not the number of registered units. These are the number of units who are actually tax filers on GST platform. And a very clear, very startling kind of fact, emerges from this, that 90% of the GST filers are micro enterprises. I have not gone granular, but actually, majority of the micro are of turnover below 2 crores. And only 0.9% are medium enterprises, 9% are small enterprises, and maybe just about 0.3 to 0.4% are large enterprises having turnover of more than 250 crore. Yes, please. Now, that's one way of understanding what the ecosystem of MSMEs in this country is. But the other way is to look at the UDYAM numbers. Anthony talked about them. We have currently about 463 lakh UDYAM registrations on MSME Ministries platform. Now, all of you must be aware that MSME Ministry now has 2 platforms. There is a UDYAM registration platform for GST registered formal enterprises, and there is a UDYAM Assess platform which has just become operational one year ago, and SIDBI is partnering Ministry of MSME for that. And that is registering informal micro enterprises who are below the GST ecosystem, below the GST radar. That means they have turnover of less than 20 lakhs and 40 lakhs. Now, in this divide is even bigger. Yes, please. If you see, 98.33% of the registered units are micro enterprises, and only 1.53 are small, and only 0.14 are medium enterprises. So this is now becoming a major, guidance for the entire policy activity in the country, whether it's the regulator, whether it's the ministries, and whether it's the key banks and NBFCs. The maximum activity and concern and concentration is on the right side, which is the micro sector, which we can also, in some way call it the Bharat of the MSMEs. In Indian population demographics, we use this term. There is India, there is Bharat. But in MSME sector also, there is a Bharat of very, very small micro enterprises, the small shops, the small kiosks, the small vendors that we see all across the country. They are in millions sometimes in some cities. If you go to Varanasi, probably there are 5 to 10 lakh micro shops there who are selling various things, small service shops. So this is a segment which was largely out of the formal banking systems and formal financial systems for very long. I'm sure SMERA has not rated anyone in this segment. They're all in that small segment or some medium segment. So this was a segment which was completely out of the formal finance system. But because of India's DPI, suddenly it's this system is now open to NBFCs, and increasingly the bigger banks are going in. So it's very important for us. I wanted to bring this divide, or let's say this differentiation in the beginning, so that the opportunities and challenges are very different for these two segments. On the left, we have medium enterprises and small enterprises who are today well entrenched in the system. They are really, I could call them formal. They are filing their returns. They understand, and their next generations are smarter generations. So they have all the world open to them to do different things. But the right segment, the Bharat MSME segment, that still requires a lot of handholding. Yes, please. So let's look at the MSME opportunities for next year. The first one, I have colored it in the same color as the Bharat MSME system, the micro system. Now, this system today is the biggest beneficiary of the Indian credit ecosystem, because the medium enterprises were getting credit. Maybe they are getting it in better products, and maybe they're getting it cheaper, but they were still getting credit earlier. But this segment has now started getting credit in a much bigger way, and they should really leverage this now. And why this is happening in India? And not all countries, or not all emerging countries in the world, are fortunate to have this kind of strong credit ecosystem in their countries. India has a very strong regulator, we know, very strong regulator who has kept our financial system very robust. We have credit bureaus, and I was surprised to see that there are many countries, many big countries, who don't have functional credit bureaus still. And credit bureaus have brought some serious, very serious lending business in this country. We have banks for all kinds of entities, and where banks cannot reach, we have non-bank finance companies which are now targeting all these micro enterprises. And where NBFCs cannot reach, we have fintechs which are very innovative and reaching there. And where no one can reach, we have MFIs who reach to the poorest in the country, and are able to dispense very small value credit of 20,000 to 30,000 rupees. Further, coming to digital public infrastructure, now it's a global recognition of India's best-in-class DPI, as they call it. Our identification system, Aadhaar, the UPI, GSTN, account aggregator. Now, these have suddenly opened up banking and making things much more efficient in the banking system. The times are crashing, the tax are crashing, and especially the biggest beneficiaries of entire DPI is the micro segment. And therefore, you see a spurt. If you see CIBIL TransUnion data for last 2 years, the maximum growth is happening in micro and smaller amongst the small thing. There is still stagnation at the SME credit offtake, the medium segment, but there is maximum growth happening at the micro thing. And then we have the credit guarantee corporations. So these are very strong pillars of Indian financial system, which today suddenly give a big fillip, are in a position to give a fillip to the micro sector. Yes, please. Now I come to the other ones, the small sector and the medium sector. They have the opportunity to make most of very favorable macro factors which India has today. India is really fortunate that they have next 5 to 10 years. I would say 5 years are a golden period when our small and medium enterprises can just expand very ambitiously. So there is, apart from the debt, we are very fortunate to have a robust equity ecosystem. And as all of us know today, we have a thriving capital markets these days and a thriving SME market. I have worked in that market, so I understand there are really some very good quality companies who are able to go there and raise equity from which was not possible even 5 years ago. We were struggling when we set up those SME exchanges. It was difficult for to convince investors to come on those platforms. So Indian equity markets are thriving, and that's a very big fuel required to growing SMEs. We are in a zone of high GDP growth, 7 to 8%. So that's a natural opportunity available to everyone. Very high domestic demand, new segments emerging, defense and so many other segments. Tourism is booming, defense is booming, green climate segments are blooming. So there is so many new sectors emerging every day. And it's just for the SMEs to grab those. There is a very favorable geopolitical advantage for India today, because all of us understand India is in a very sweet spot. The Western countries are looking at China +1 strategy, or even exiting China, and India is one of the biggest and best options for them. So India is coming out as a robust and a strong country with strong institutions and strong SME segment to support, to take advantage of that geopolitical advantage. And there's political stability. We've just had an election, and we all expect to have a stable government for next 5 years. So very, very good opportunities, I would say, for SMEs for next 5 years, whether it's the micro segment or it's the bigger, small and medium segment. Yes, please. Yes, but there are challenges for MSMEs in next 5 years. So just coming very quickly to challenges. The micro segment, I think the challenge is that there is a digital economy which is emerging very fast. And as we move forward, financial services, market access, now all of us are ordering, all of we are just ordering our stuff. In the newer generation, everything is being ordered online. Increasingly, there is a digital ecosystem emerging in the country where financial services, market access, knowledge, talent, government benefits, everything will be driven through digital ecosystems. And if the micro system, which is still a large component of whom are very, very informal, if they don't onboard this system, they can be left behind. So it's very critical for the stakeholders to bring them onto digital ecosystems. And SIDBI and Ministry of MSMEs UDYAM Assist platform is the first big step in that direction. We are registering and giving a digital identity to all the micro enterprises in the country. Yes, please. And now then coming to SME challenges, I think the SMEs of India can only be held back today by their own lack of grabbing ability to grab the opportunities. So they need to understand that everything is available to them, but do they have the bandwidth to manage scale and innovation? These are not easy things. These are complex things. At every industry at certain level of scale brings so many complexities, and you have to upgrade your organization machinery to really manage that scale and continue to grow and continue to innovate, because the new economy is now emerging. And second thing is that are they ambitious enough to be globally competitive? This is one area which I still feel there's a lot to be done in India. We have not seen Indian SMEs becoming big global players. There are companies who do a lot of global business. They sell in global markets, but we have not seen global leaders emerging. Probably like some of them have emerged from countries like China, who are in manufacturing, in services, in technology, who have gone out and become global players. And that's, I think, the only inhibition is their own ambition and probably, putting the right teams together to manage that scale and innovation. Of course, there is going to be a huge impact of the new age industries. I think the SMEs need to understand that and be prepared for that. The EV is emerging. India has a large SME segment, which is today suppliers of engine components to auto industry, very huge engineering industry, and they are going to be impacted by EV. Though there are new segments emerging for them like defense and other things, but they need to understand that market is changing. Maybe it's a little slow in India, but over 5 years, 10 years, EVs will completely have the potential to replace the IC engine motor cars. And then there are the chip ecosystems which are emerging, which will drive everything in an intelligent ecosystem. So manufacturing will become more and more intelligent, and our SMEs have to understand if they want to, have that ability to produce products using all this technology. And finally, there is a ESG regime which is now suddenly gathered steam globally. All the global OEMs, the global buyers, everyone is now looking for their supply chains to be ESG compliant. So SMEs also need to understand that they need good governance standards. They need to have understanding of better environment and climate friendly practices, get some green certifications for themselves. SIDBI is doing a lot of stuff in this. All of you can just go to SIDBI website and just understand what SIDBI is doing for green economy, for green. We have multiple schemes, and we are helping SMEs in energy efficiency, accrediting themselves with various certifications, providing finance for energy efficiency, solar rooftops, and so many other green initiatives. So I feel these are broad level the SME challenges which every SME will face in them. But the biggest challenge, as I said, is really having themselves to think bigger and probably manage, put together good teams for innovation and scale. Yes, please, the last slide. So this is just about SIDBI. So all of you know about SIDBI. We're there for now more than 33 years. SIDBI is there for 33 years, and its role has continuously evolved and grown in last 33 years. And today we have very, very deep divisions, verticals working on each aspect which concerns MSME. So we are very big in institutional finance to all kind of lenders and equity providers. We ourselves have a very robust direct credit practice, green finance, cluster development. We have started in a very big way. Nearly every state government is today engaged with SIDBI for cluster upgradation and new cluster developments in the country. Venture capital, we have been there for last 2 decades. Credit guarantee and ratings. Of course, we have a old relationship with SMERA and equity ratings. Policy advocacy SIDBI is doing. We are managing multiple government programs today, maybe 10 major government programs in the country, and digital initiatives. Of course, SIDBI has created multiple digital initiatives in the country for SME ecosystems, and we are now operating at much higher scales. We are a balance sheet size of more than 5.5 lakh crore, and we are very happy to be partner of SMEs in this next 5 year of, as I said, a very golden period for Indian MSMEs. Thank you.
Thank you, Tyagiji, for that keynote address. I'm sure our audience and fellow panelists were as delighted as me after that insightful presentation, especially on the opportunities. Now we have Mr. Suman Chaudhary to present a data-rich deck from SMERA. Let me share a few words about Suman. Mr. Suman Chaudhary is Chief Economist and Head of Research at Equity Ratings and Research Limited. Suman drives thought leadership initiatives in Equity Group and provides opinion on domestic as well as global economic and industry trends. He is also responsible for strengthening the group's research capabilities and expanding the suite of research products and services. With an aggregate experience well over 2 decades in credit ratings, research, and risk, he has worked in leadership roles at ICRA and CRISIL before joining Equity Ratings and Research Limited. He has also worked in the banking sector as Group Head in Credit Risk Management Group of ICICI Bank. Suman is an MBA from IIM Calcutta and a graduate in Mechanical Engineering from IIT Kharagpur. Over to you, Suman.
Thank you, Tony. Let me first share my screen. I hope my screen is visible. Is
Yes.
this okay? So good evening to everyone in the audience, and especially to our distinguished panelists. This is a very important occasion. We are today celebrating the World MSME Day, and SMERA has organized this webinar on this occasion. Clearly, the importance of MSMEs is very well understood by us, given its importance in employment generation and its its role in GDP growth. I think it's very relevant that we discuss the health of the MSME sector and the growth prospects as well as the challenges of the MSME sector today. So what I will do first is to just talk about SMERA a bit. I think most of you would know about SMERA. SMERA was conceived way back in 2005 as an initiative of the Ministry of Finance, Government of India, and also the Reserve Bank. It was promoted through SIDBI and Dun & Bradstreet. Both are very well recognized names in the MSME ecosystem. So along with that, there are other institutional shareholders who supported the incorporation, which included State Bank of India, even private sector bank like ICICI and a foreign bank. Clearly, SMERA was world's first MSME-focused rating agency with a very sustainable rating model, which was very different from the conventional ratings methods that were used and which were more relevant for the mid to large corporates. Subsequently, SMERA has been hyped off due to the regulatory requirements into a separate entity. And it's now a 100% subsidiary of Equity Ratings and Research. So SMERA has definitely seen significant milestones. It is not just the rating models that SMERA has developed for MSMEs. There is also the recognition and the support that has come from DFID UK early on in the journey, which was to promote the growth and competitiveness of SMEs. There was a grant which was given by DFID UK under the World Bank project. And there was also award that SIDBI had received earlier on for developing and setting up SMERA. So essentially, SMERA has clearly played a very pioneering role in SME assessment in our country. And there are currently more than 60,000 SMEs who have benefited from the services of SMERA. So clearly, there is a significant contribution that has come from SMERA in this whole MSME ecosystem. And quickly about our group, again, our parent company, Equity Ratings and Research, it is the main regulated entity in the rating space, accredited by both SEBI and RBI. We have completed almost 10,000 ratings so far. And apart from SMERA, we also have incorporated India's one of the first CRA. We have been the first CRA to incorporate a company purely dedicated to ESG assessment, which was called ESG Risk Assessment and Insights. The important thing is that we have recently received the license of Category 1 ESG rating provider from SEBI. So this is in a nutshell about the group. And as I mentioned earlier, we have a complete institutional shareholding and kind of backed by two very strong names in the MSME ecosystem, which is SIDBI and Dun & Bradstreet. So coming back to our presentation, what I am primarily going to focus on here is to analyze the progress that India has made towards access to finance for MSMEs. So we are going to look at some data, and we are going to discuss some issues, and we are also going to talk about the way forward. So let's look at the data first. And if you look at this chart, and remember, this data is not just bank data or the bank loans to MSMEs. What we have also included are the loans provided by the NBFCs, and which is kind of starting to grow. So this green line here, as you can see, this is the total MSME exposure, which includes the lending by both banks as well as by NBFCs. So if you look at this data, from around 13 trillion in around April 19 and in April 24, it has more than doubled to 27.6 trillion or lakh crores. So clearly there is a very significant growth in lending to MSMEs that has happened in India. You can see the growth that is coming from the banking sector. That's obviously the primary contributor. But you can also see from this smaller columns that this is where the contribution from NBFCs for the MSME lending that is increasing. So this is where it is. So these are some of the main observations. We have seen, therefore, a very solid growth in credit to MSMEs post-COVID. And this is kind of supported by the penetration made by the NBFCs. So the total credit outstanding, as I mentioned, to the MSME sector, we are pegging it at around 27.6 trillion rupees, and which is more than double. And in this, if you look at the breakup, the MSME exposure of banks, that has also been pretty healthy, pretty strong, I would say, over the last 5 years, as compared to the CAGR of 11.5% in non-food credit. The CAGR of MSME exposure has been 15.4%. So 4% higher. So clearly there is a growth that we are seeing there. And if you include both that is what we have done in the total exposure. We have included both the finance to manufacturing unit and to the services sector. So the total number in our estimate comes to around 24.6 trillion rupees, which is more than the double as we have compared to March 19. In this, the share of the manufacturing sector is 42%. And importantly, there is a larger share which actually comes from the services sector. So the point here is that there is also a growth in the MSME services sector that continues to happen. Manufacturing also has been growing, the SME manufacturing credit. So it is compared to services, while services has been growing, but particularly in the last few years, this is a very good sign that we are seeing that the credit to MSME manufacturers, that's growing strongly, 17.1% CAGR in the last 5 years. SMERA research also estimates that the NBFC loans, coming to the NBFC loans to MSMEs currently stands at around rupees 3 trillion or 3 lakh crores as on March 24. And 5 years back, this was around 1 lakh crore, 1 trillion rupees. Essentially, this exposure or this lending by NBFCs to MSMEs has tripled in the last 5 years. So what has led to this? Clearly, there is a significant change in the lending ecosystem. We have seen a large number of SME-focused NBFCs who have scaled or are continuing to scale up their operations with or without digital platforms. Having said this, as I showed you, that if you look at this blue chart, that is the SME lending as a percentage of overall non-food credit. So total SME lending is still around 17% of non-food credit, which is not very significant. Now, let me give you a picture on asset quality in MSME loans. What does the picture look like? Now, one of the challenges here is in the way we can consolidate the lending data. There are challenges in aggregating the overall picture on MSME delinquencies. So what we have done is we have tried to look into the published data of RBI on the MSME portfolio of banks only. So if you look at that data, the last financial sector stability report from RBI is talking about an improvement in the GNPS, gross net non-performing assets, to 4.4% as on September 23. This is the last data available. I think RBI next report on financial stability is due shortly. But the number has really come down if you compare it with 2022 figure, from 7.7% in 2022 to 4.7% in 2023. And it is expected to have come down further. MSMEs clearly witnessed stress during the COVID period. And there, of course, this has been partly addressed. And some of the improvements can also be attributed through some of this dispensation that has been provided by the regulator, loan restructuring. And also, we should not forget about the ECLGS, the Emergency Credit Loan Guarantee Scheme, which has been pretty successful in relieving some of the stress. While the headline figure in the bank's books are looking better, RBI has also reported an increasing trend in SMA-2 loans, which needs to be monitored. So as of now, it is only 1.7%. But since this segment can be quite vulnerable to slippages, this is important to track. Also, the other important data point is they have talked about the total NPAs for the ECLGS portfolio, which is around as I understand, around 2.4 lakh crore for SMEs, which was the position last year. Now there, the NPAs have been higher at 6.5%. This was those lending that were done with that government guarantee during the peak of the COVID stress. So delinquencies, also another observation is that delinquencies are higher in the services and trade sector compared to the manufacturing sector. Because of this kind of some of these possible data points, we see that the banks are still cautious on MSME credit. So there are many banks who have not really grown their MSME credit book that extensively, although the overall number looks good. But there are many, for example, public sector banks who have seen a bit of a moderation. The other thing is that there also has been some regulatory guidance with an caution on unsecured retail loans. There has been an increase in risk weight on unsecured retail loans, but this has also kind of had some impact in the last 6 months on underwriting for unsecured micro business loans, because unsecured retail loans and micro or small business loans, there is, as you can understand, there is some kind of a overlap. We also see from our ratings portfolio that some NBFCs have slowed down the growth in unsecured MSME loans last year. We have talked about some of the issues, but if you look at what has really driven the growth, the more than doubling of credit over the last 5 years, what has really led to this? So what are these factors which are driving better access to finance? Clearly, the first point is a very supportive government policy and regulatory policies, including the kind of relief schemes that we have seen during COVID pandemic. I talked about the ECLGS scheme, which was primarily targeted to the MSME sector, and total disbursements was around 2.4 lakh crores. There is also a lot of policy support that you are aware on working capital relief. The government is consistently, I think, pushing the agenda of quick clearance of outstanding dues of SMEs from not only government, the PSUs, but also from large corporates. In fact, you must be aware of the amendment to the Income Tax Act that was proposed, which is kind of uncertain, in some uncertain territory now. But I think the whole idea is to ensure that SMEs get their payments quickly, and it doesn't create a working capital stress for them. So that's I think that kind of policy support in my mind has been a very important factor which is driving better access to finance. We are also seeing, I think Mr. Tyagi mentioned some of the data points, that there is a very steady progress in the formalization of the MSME sector, particularly the formalization, we should say, of the micro segment, which was where the challenge was. And this is possibly because of the efforts taken by institutions like SIDBI. And it's also important to note that we have far more data now supported by the GST system, the credit bureaus. So the whole the ecosystem is far more, I would say, enabled today with data. Of course, we still have some way to go, but I think there is a very distinct progress there. Significant rise in the number of NBFCs, as I mentioned earlier. This has really improved credit coverage and penetration, particularly in some remote areas where banks are unable to access. The other important change that is gradually getting visible is that from the traditional collateral-based lending, there is a transition to cash flow-based lending, particularly in some NBFCs that are focused on MSMEs. The growth of digital lending platforms clearly, which mostly coming from the NBFC sector. This is facilitating quicker lending decisions. Even banks, there are government platforms, and banks are also kind of working on these platforms just to ensure quicker decisions on sanctions and disbursements. And finally, the use of technology-led platforms for supply chain financing. Institutions like Receivable Exchange of India is doing a fantastic job. So more bill discounting. I think all of this augurs very well for access to finance. On the challenge part, I think we need to kind of just recognize and just take stock of where we are in terms of the total number of MSMEs. I think we discussed this, 6.3 crores. This is, a kind of a number that we keep on kind of seeing. But I think we need to be far more confident on the real size of this whole ecosystem. And that is where the more data coming in and more registration of the informal businesses is so important. As of now, as per the data, if we believe that the number of 6.3 crores and 4.6 crores is what registered MSMEs are, then the share of the informal segment is around 27%. What we see is that the funding to the sector has seen an improvement. But if you look at the number to GDP, I mean, if you just look at MSME credit to GDP, MSMEs, as I think Tony mentioned, that MSMEs contribute to around 30% to GDP. So contribution to GDP 30%, but credit to GDP is around 9%. So clearly there is a gap which obviously needs to be recognized, and we need to address that. There is some data that IMF had provided where they're saying that the total global lending to MSMEs stand at around USD $3.7 trillion, but there is a large unmet financing gap. So this gap is not unique to India. The India contributes to this unmet financing gap, but globally this financing gap is around 5.2 trillion. In East Asia, they say that around this share of East Asia is 46%, which is where India is. And so 20%, our estimate is 20% of this gap in East Asia comes from India. So if we do those maths, we come to this part that we still have an unmet financing gap of 40 trillion rupees. So, and here, if you in 40 trillion, there may be a still, as I mentioned here, there will be a segment 20-30%, which are very potentially weak credit and difficult to kind of lend to. So even if you exclude that, what we are saying is we still have around an equal size. Today we are 27 trillion market in MSME lending. We have almost another opportunity of an equal size out there, which is available. So that's an opportunity, but it's also a challenge in the sense that we need to address that financing gaps. What are the real issues in improving access to finance? What are the things that really impair the access to finance for MSMEs? These are some of the points that we believe are very relevant. We mentioned about the informal segment, which still has some way to go in terms of the kind of data availability. Surely is something they need to be more and more registered. One of the issues that we face as a rating agency is that lack of penetration of ratings, of SME ratings. Even after we have done more than 60,000 ratings, that number is still low compared to what we talked about in terms of even the number of, even if you forget the micro businesses, let's talk about the small businesses. Even small businesses, a registered number is around 700,000 number. And the ratings that we have done, or even the whole, all rating agencies put together, probably will not be more than 1 lakh. So essentially, the coverage or penetration of SME ratings is low. The acceptance level has to increase. There is an absence currently of regulatory impetus. And also, I think from the rating industry perspective, the viability of rating operations in SME ratings is still not very established at the current fee levels. If I come to bank loan ratings, which is applicable for the bigger, let's say, small businesses and medium businesses, there is a trend over the last 5 years that banks have stopped insisting on bank loan ratings below a certain amount of exposure. For many banks, it is 50 crores. So there is also an adverse incentive to keep this credit unrated, and because many of them may get speculative, as we call them, speculative grade ratings. So these issues are all not allowing the free flow of information or more information and more analytics on the MSME ecosystem. The other factor is in the overall financing system, the financing world, is a generally higher perception of credit risk. If in MSMEs, from business disruption, succession issues, because they're dependent probably on one promoter, payment defaults by customers. When the payment defaults means defaults by the customers of the MSMEs, and also a diversion of funds for personal use. So there are 2, 3, 4 major, I would say, credit issues on which there are concerns that typically there are very generic concerns that lenders have. The other part is higher cost of servicing. For MSMEs, particularly micro and small businesses, banks find the cost of servicing to be higher compared to the kind of fees that they generate. And sometimes it also leads to higher and prohibitive transaction charges. So the economics is still something that some banks have to work on. Put together, the inadequate research on MSME credit behavior. Again, as I mentioned, that there are data constraints that we face, because of which we really don't have, or the whole ecosystem doesn't have enough data, enough credit behavior data on MSEs. I'm not talking about the medium enterprises. I'm talking about the micro and the small enterprises. Now, that is also a constraint, because if this was available, probably it would have helped the lenders to take credit decisions a little more free. Again, the last point is the collateral part. I think even today, wherever there are uncertainty on credit, collateral still becomes very important. And given that unsecured loans have become, or is considered to be low ticket unsecured loan is considered to be a little more risky, I think the insistence on collateral is potentially higher, especially when you are looking at a higher exposure for growth, when an MSME is looking at lower interest rates. This is the picture that we see. This is the base case scenario in MSME credit over the next 5 years. This is something that Acuita Research has projected. So we are saying that from 27.6 trillion rupees total credit to MSME sector, this will go up to 65. So this will also again much more than double to 65.4 trillion. And the NBFC sector will also be supporting this credit growth. So here the observations are as follows. We are expecting growth of around 19 to 20% in MSME. This is the average credit growth. Banks will grow their MSME credit at around 18%, and NBFCs will grow at an average of 25%. And this is against the non-food credit assumption that we have, that is 14%. So clearly, the point here is that this differential growth will definitely be there. And this will lead to MSME credit reaching a number of, as I said, of 65 trillion rupees by April 29. But even then, you see that the share in overall food credit will only moderately rise. Today we are 17%, we'll get to 21%. But if I do some more maths, and that's what equity research did, we saw that the aggregate demand for MSME credit at the same point in the next 5 years may reach 100 trillion rupees. So what we are saying is that we grow, but we still reach 65 trillion, and the demand is 100 trillion. So there is still a gap of 30-40 trillion of rupees that's possible, and this covers the micro businesses also. So what essentially one has to do is, obviously the bank credit to the sector has to grow faster. NBFCs have to grow faster to kind of at least bridge this gap, if not eliminate. Finally, I wanted to just talk about some measures on what the various stakeholders can do in the MSME ecosystem to really, not just grow, but also address the financing gap. So I think the first is very clear. There has to be an increased focus on the registration of micro and small SMEs. Maybe some incentive structure can be put in place. Mr. Tyagi is the right person to contemplate on this. I believe that Government of India, if they are not already, or any of the authorities, they should contemplate a comprehensive database of MSMEs pan-India. There can be a state-wise list, but a comprehensive database of MSMEs pan-India, which will be maintained maybe by an independent party with support from Ministry of Corporate Affairs, MSME Ministry, and this can be accessed by stakeholder. I think having a comprehensive database really helps in the lenders and the rating agencies accessing this whole, the whole ecosystem. What is also required is further deployment of technology for seamless data access. As I said earlier, there is already some progress that has been made, which is helping. For example, GST data on SMEs is easily available, but more progress can be made, which will make MSE underwriting. When I say MSE, I mean micro and small, and underwriting easier and more efficient. On rating part, further digitization. SMERA has been one of the early movers on digitization. We have made some good progress on the SME digitization of SME rating process. I think far more work will be required in the industry so that the process, the cost of ratings becomes more affordable for the MSEs, and it also at the same time it ensures that the basic due diligence is completed. The other point is that I think the SME ratings need to be taken, if I can say so, more seriously by banks and NBFCs, apart from whatever they accessed on the credit bureau part. This can help to reduce the cost of underwriting and also helps to monitor the existing exposure. So if we have a regular flow of ratings, not only for a one-time exercise, but we also do ratings on a regular basis for this whole or the large part of the MSME ecosystem, then what it does is it gives a lot of data which helps in kind of doing credit analytics. It gives a lot of more data, more analysis to the lenders and help them take decisions. And lastly, I think the implementation of quicker payment of dues. What we continue to hear is MSMEs still complaining about a non-payment of dues. How do we implement the policies of the government, and which can also, kind of help in increasing receivable financing. I think with this, I wanted to conclude my presentation, and maybe we can go back to Anthony for the next stage. Thank you.
Thank you so much for that data-rich presentation. Clearly, 3 points that stayed on with me are how the credit to MSME sector has doubled in the last 5 years. Today stands at 27 lakh crores, and you have projected more than doubling in the next 5 years to about 65 trillion
Yeah.
Indian rupees. But still,
Yeah.
that leaves us with a gap of about 40 lakh crores,
This
which
is our
is the
estimate.
current,
Yeah.
in the overall. So that's a good, on one side, yeah, that's a challenge, but also an opportunity for the lenders and the lending institutions and the stakeholders to address that problem in the next 5 years. I once again request all the participants to use the chat function to share their questions. We now move towards the most awaited part of our webinar, the panel discussion. But before that, let me introduce our panelists. We have Ms. Natalie Nicolaou, Senior Financial Sector Specialist in Finance, Competitiveness and Innovation Global Practice at the World Bank. In this capacity, she leads financial sector dialogue with countries in Eastern Europe and Central Asia on a range of issues, including access to finance for the MSMEs that we just discussed, deposit insurance, and non-bank financial sector. She has participated in several financial sector assessment programs, including Maldives in 2023 and India in 2024. Prior to the World Bank, she worked at JP Morgan, McKinsey and Company, and Piraeus Bank, a Greece-based banking group. She has an MBA from Harvard University and an AB in economics from Princeton University. Now we have Mr. Sudarshan Chari, MD and Head, SME Banking, DBS Bank India. Mr. Chari joined DBS Bank India in 2019 as the Head of Business Banking and now oversees the expanding SME client franchise for India. He comes with over 16 years of experience in commercial lending, with a deep understanding of commercial banking, including SMEs and mid-market businesses. Mr. Chari specializes in business development, relationship management, team management, and credit risk. Mr. Chari has completed his general management program at the Wharton Business School. He has a master's degree from SIES College, Mumbai, and has completed his undergraduate studies in commerce, economics, and accountancy from the same university. Next, we have Shri Uday Shankar Majumdar, the Chief General Manager and the Group Chief Risk Officer at Canara Bank. He has a 30-year-long and diversified career path in banks and financial institutions. Starting his career as a cost accountant in 1994, he joined the Tamil Nadu State Financial Corporation as a project appraisal officer and served there for 7 years till 2001. He then joined Syndicate Bank as cost accountant and grew to the rank of general manager. Prior to the merger of Syndicate Bank with Canara Bank, he held key positions like regional head, chief financial officer, chief risk officer, and also headed the treasury and international banking division of Syndicate Bank. Next, we have Mr. Shankar Chakrabarti, non-executive chairman of SMERA Ratings Private Limited, an equity group company. He leads the transformation of SMERA from being an SME-focused credit rating agency to a technology and innovation-driven knowledge and opinion provider. Equity Group comprises SMERA, Equity Ratings and Research, one of the leading credit rating agencies, and ESGrisk.ai, India's first dedicated ESG rating company. Shankar is also the non-executive chairman of ESGrisk.ai and MD and CEO of Equity Ratings and Research Limited. Shankar has more than 25 years of expertise in developing and selling credit ratings, data, analytics, risk management, and financial research solutions. Shankar is a member of FICCI's Capital Markets Committee and Executive Committee of Maharashtra State Council. He is also a member of IBA's Standing Committee on MSMEs. Shankar was an independent director on the board of Indian Oil Corporation. He has been a member of the working group constituted by the Insolvency and Bankruptcy Board of India for recommending the provisions of the Insolvency and Bankruptcy Code. Shankar holds a master's in business management and has a bachelor's degree with a physics major. We also have Shri Ravi Tyagi joining the panel and Mr. Suman Chaudhary as the moderator for the panel. A small announcement. Shri Tyagi will leave us right after the panel discussion is over, as he has prior commitments. We thank him for agreeing to join us and share his perspectives. Let's get on with the panel discussion. Over to you, Suman.
Thank you, Tony. I think we have not so much time left, so we will kind of proceed with the panel discussion right away. And for the first question, I would like to put to Sri Ravi Tyagi. Sir, in your opinion, how do you assess the overall health of the sector, the MSME sector, from the perspective of a development financial institution? SIDBI has been working on this whole MSME ecosystem for a very long time. How do you see the current health, and how do you see the prospects of growth going forward? Mr. Tyagi?
So you're on mute.
Yeah. So from a DFI perspective, I think all of us had a lot of apprehensions when COVID happened. And really, it was a very serious situation, a very serious event, and we didn't know what will be there at the end of it.
Right.
And all of us thought that MSMEs will be the most vulnerable ones.
True.
And some of the things which government did, and that's why the Indian central bank is today being voted as central bank of the world at so many forums. They held it together. They held the entire system together. The RBI was so proactive with so many things. So as I mentioned, if you remember my first slide, I showed that vast India, which is constituted by small micro enterprises. Now, the banks don't even reach them. So there were two segments of MSMEs which India was worried about, the government was worried about, and they did different things for them. So for the formal ones, the big ones, ECLGS came as a magic line. So the government did it in a I would say it was really at that time unbelievable that government would just guarantee 100%.
Absolutely.
But that huge guarantee came, and SIDBI helps in managing of the National Credit Guarantee Company.
True.
And at that time we thought, everybody thought that 1 year down the line or 2 year down the line we'll be seeing huge losses or claims out of that NCGTC. But that in the end worked out beautifully. I think everyone availed of it. Whoever was eligible, they availed of it, and the banks, it suddenly gave them a relief because they had some accounts which were stressed for very genuine reasons. And we all see that after that, the credit bureau, we have regular interaction with so many credit bureaus, and there were some signs that everyone was expecting a spike after the COVID, that now it's going to spike, the delinquencies, now it's going to spike. There was slight
Right.
spike, and then suddenly it just flattened. And today we are at par or even better than the pre-COVID days, the delinquency part of it.
Right.
So one thing is that the SMEs have survived, sustained, and grown after that. MSME credit has seen very good growth. All the banking system is reporting very healthy numbers, delinquency, wise, very, very healthy portfolios with MSMEs. So that's happening. And on the other side, the micro enterprise, the micro informal enterprise, where MFIs and NBFCs were funding, that was also very nicely supported by government, Reserve Bank of India. They gave SEDBI and NABARD a lot of liquidity lines, which we pumped into these entities, which were funding small and micro enterprises. The restructuring was even offered to them also. And those steps ensured that even at that informal level also, the delinquency, didn't happen because of lack of liquidity. So both these, I would say, ecosystems have revived, growing, and we can see the results today. So as a DFI, I would say we are very confident that it's a very, very healthy MSME ecosystem, and it's going to be there. As you mentioned, there are different numbers for growth, whether it's 25 lakh crore is the gap, or whether 45 lakh crore is the gap. There may be a difference, but the fact is there is a hunger at the bottom of the pyramid of the MSME sector for more and more formal credit. And that will translate into not only economic growth, but also this sector. If there are 10 crore informal micro enterprises, if you multiply that by 4, if you include their family members, that's nearly 30 to 40 crore, population size, which you are creating demand also, because they are also demand for the formal enterprises. They create demand for the formal enterprises. So we see good times for MSMEs. As a DFI, I would say that very confidently.
Correct. Thank you for that. I was thinking of asking the next question also to you because you have other engagements.
Yeah.
So, sir, in the next 5 years, what are the big steps that you expect, let's say, the government and SIDBI to take to even, as we mentioned, that there is still some gap in finance which needs to be addressed. So, what kind of, I think, important steps you expect? And the other part of the question is that given your earlier role in venture capital, I thought of asking this question to you. What's the role of venture capital funds in development of MSMEs? Because we all mostly talk about lending, but how is it that venture capital funds can also play an important role?
So I'll start with the second question first.
Right.
So the venture capital, the government of India has played a very big role in last 10 years. So it started with, there was a lot of good foreign capital always flowing in India. The private capital was coming
Private.
from US, but there was kind of a concern in the foreign LPs that why there is no domestic capital in India, and why mostly it's foreign capital, but there is very little domestic capital. The banks in India, the insurance companies in India have very limited exposures now. They had about 10-15 years ago, but I think now most of them don't really encourage exposures to venture capital.
Right.
But in last 10 years, Government of India launched Startup Fund of Fund for 10,000 crores, which SIDBI manages. So that became a very good benchmark. And then there was another fund which was given to Ministry of MSME, which is for MSMEs, another 10,000 crores, that's 1.2 billion, $1.3 billion each. So these two funds, they became some strong institutional domestic capital for the venture capital and funds in the country. And
Right.
that has helped a lot. We've seen most of the funds today where SIDBI assesses them and approves them under the fund of funds. They start getting much better LP traction, not only from foreign but domestic family office and domestic HNIs who feel much more confident that an institution has taken. So there has been a spurt and there has been a lot of innovation, and but venture capital goes to a limited number of companies, limited number of startups.
Right.
Goes to either very highly innovative or very highly scalable entities.
Growth
So it went to a
prospects.
lot of new economy companies, and we have seen more than 100 unicorns emerging. But that was not sufficient. As India today, we see that there are millions and millions of enterprises which are in traditional sectors, and today the entire country wants the manufacturing to grow. So the venture capital was not flowing that much in that segment, but that has been suddenly helped by the capital markets. Certainly, the capital markets are open for entities, traditional entities who are growing fast. But
Right.
just caveat I would like to put for venture capital, that suddenly, because there is so much of spike, or let's say the activity, exuberance in the capital markets, also to some extent in real estate in some pockets of the country, suddenly there is the private money is being driven into these two markets in a big way.
Right.
So which make, for the short term, for next 1 to 2 years, you may see some of the funds struggle to raise money in domestic for domestic AIFs, because those AIFs give returns over a period of 6 years, 7 years. But in capital markets, what is happening in India today, everybody can make big returns very quickly. So there is going to be a little bit challenge for a short term, I feel, till the time probably capital markets show more rational, start showing more rational behavior. So that's one of the things. And for the government of India, your first question, what are the things? So government of India, see, the one thing is very clear, that government of India has understood the power of leverage of non-fund support. So the guarantee programs of government of India were very successful.
Very effective.
Through those guarantees, we could support 3 lakh crores of credit, more than that, under ECLGS.
Correct.
And actually, government didn't have to really use even a fraction of that guarantee. But that guarantee enabled so much of credit to flow them. And then we had programs like PM Swanidhi Street Vendors Program, where nearly 7 million street vendors were given small loans just on the strength of guarantees from Government of India. So one, I expect more guarantee-driven policy
One fund-based support.
Right. Give guarantee, because the government does not cash out on day one, and the guarantees claims will keep on coming. So it's a good way of supporting deep policy kind of interventions in the country. Number two is a big push for manufacturing is what I see. So PLI schemes already the government has been promoting for last now 4 years, and we may see some more directed push to PLI. So I see a big push coming towards manufacturing. And third is, I see again, because of sudden revelation of these numbers which are getting registered on UDYAM, this assessed platforms, we're going to have 7 to 8 crores micro enterprises informal getting registered. So huge policy initiatives, probably interest subventions, higher guarantee coverage for these people to bring credit, and also steps to formalize them, bringing them into
Basically,
the
some
mainstream.
kind of an incentive to ensure the
So
formalization.
so I'm sure that these are the three segments in which Government of India will continue to work. And there is one more thing which Government of India is now pushing in, and that's building the AI and ML big ecosystem, big AI intelligent ecosystems in the country. So that's where, of course, some really deep tech startups are going to benefit.
Right. Great. I think this was quite comprehensive. So thank you, Mr. Tyagi.
Thanks.
I will now move to Natalie. Natalie, I think World Bank regularly assesses the progress in the access to finance for MSMEs in the developing economies. I understand that you have been doing that exercise, particularly for India in the current year. So what is your assessment of this progress in access to finance in India, particularly in the post-COVID period?
Thank you very much. Can you hear me? You can hear me, I guess.
Yeah, sure. Please go ahead.
All right. Thank you very much for inviting me to the panel. I would like to share some highlights from the India Enterprise surveys. This took place in 2022. Enterprise surveys are conducted by the World Bank in over 150 countries. They are nationally representative firm surveys of managers and business owners, and they provide insight into many of the business environment topics, including access to finance. So from these latest results from India from 2022, we see that indeed there is a very significant problem with access to finance for Indian firms and MSMEs in particular, which has actually deteriorated since COVID. So access to finance is a more severe problem now than it used to be in the previous survey that was done. For example, we see that only 11% of Indian firms have a bank loan or line of credit. This is a staggeringly low figure. It's much lower than the average in South Asia, which is 28%. It's lower than the world average of 34%. It's lower than in other comparable countries like Indonesia, Turkey, Mexico, etc. Another insight that we get from the enterprise survey is that a quarter of the firms state that they're either fully or partially credit constrained. And this is actually true across sizes. For micro, small, medium, but also large firms, they all state they face a credit constraint. In India, we also see a very high value of collateralization as a percentage of the loan amount. It's 185% according to the survey. This is above the world median. And there's also a very large share of firms whose recent loan application was rejected at a bank. This figure is 25% of Indian firms have recently experienced a rejection. Again, this is higher than the rest of the world, which is at 9%. And the final insight I wanted to share with you about this survey is the survey asks firms to rank their business goals, and 22% of Indian firms, they rank access to finance as their biggest obstacle, more than other factors. The second one, by the way, is tax rates. And the third one is in the informal sector. So in other large economies, a lower share of firms selects access to finance as the biggest obstacle. For example, it's 11% of firms in Mexico and 15% in Russia. So if we look at the survey that was done previously, we do see that many of these indicators are worse in 2022 compared to the previous one. So they all point to the fact that has been highlighted during the panel discussion that in the post-COVID recovery, we do see a more severe access to finance. And we estimate that it's around 11 to 16% of the country's GDP.
Right, right. So, Natalie, as you say that, though this is slightly counterintuitive to us, but you say this challenges to finance very much remain or may have even intensified. So what reasons would you attribute that to? What are banks kind of, as we were discussing, are banks becoming a little more cautious, or is it some other reason why the access to finance is still a big problem?
I actually didn't get the impression from my 2 weeks that I spent in India and I just returned now that the banks have become more cautious. And if anything, I am sensing that there has been a strategic shift towards many of the banks towards the MSME segment, because it has proven to be a profitable segment with actually reasonable asset quality characteristics, and of course supported by the numerous public policies in India. We have attributed it to the greater digitalization that is taking place, which is bringing more firms to increase their demand for credit much more than in the pre-COVID time, as well as again, many of the policies that are supporting demand for credit. For example, the formalization that was mentioned, the UDYAM registration, as well as the emergency COVID scheme that was introduced, as well as a change. There has been a change also in the definition, whereby more firms became now eligible for MSME loans by banks, et cetera, et cetera. So as a result, we're seeing a real booming of the credit growth, but at the same time, the demand has increased kind of that much more.
Right, right. Great. I can now move to Mr. Majumdar, who is the CRO of Canara Bank. Incidentally, I and Mr. Majumdar go a long way. I was an analyst more than 20, 25 years probably back. I was the analyst of Syndicate Bank, and Mr. Majumdar was on the other side. And he had numbers on the top of his head. So it was a very easy interaction for me when I was the analyst in Syndicate Bank. So thank you, Mr. Majumdar, for coming for this webinar. So to start with, the share of MSME loans, if I look at your bank in particular and many other public sector banks, that has been a bit stagnant, and credit growth is a bit muted. So if this is true, then what are the factors which is contributing to the relatively moderate growth in the MSME portfolio? And do you expect this to change in the next 5 years?
Yeah, thank you, Mr. Chaudhary, for the introduction. Nice to see you all, and thank you all for inviting me for this panel. Yeah, finance to this segment has slowed down, rather stagnant for a couple of years, I can say, because before COVID, I think the growth was very high, and all were pursuing this MSME because of the reasons that we can have a diversified portfolio, can get better collateral, as well as we can have a higher margin. So all these reasons got it is not become relevant for us for further financing after the COVID, when we saw a dip in the financing. Of course, last year we saw a little bit growth in financing, but what is happening now, of late, last 1 or 2 years, what we are observing that for certain banks, there is a push for this MSME credit. As a result, a lot of takeovers are happening. So why I am worried for that, and sometimes I am happy when my accounts are taken over, when I'm saying that taking over is happening without proper assessment, and that is leading to excess finance. Okay, whichever entity is in need of such kind of account, I have no problem to leave. But that has ultimately resulted in tepid growth in our portfolio because of the takeover.
Correct.
Like where collateral security is also not there, there's no requirement of, based on the performance, there's no requirement of finance. So I feel that does not send any positive signal, and we are not sending a positive signal to the sector as well. So that is how we let some of the accounts to go. So the one side that is happening, but the MSME sector as a whole is growing by 18 to 20% because of certain reason, like say indirect finance is there. We are giving to NBFCs. NBFC is done giving to the MSMEs because they have got better, capabilities to onboard, monitor, as well as recover.
Correct.
That is the reason I think because of this higher adoption of fintech, they are able to do this.
Correct.
But of course, the digital public infrastructure is today better, and the public sentiment as well as the promoter sentiment about credit history is growing. That is a very positive development. As a result, when I have the balance sheet, when I have the credit history, and account aggregator is also coming, combinedly, things will be definitely better. And ecosystem, this ecosystem is giving a positive hype to this. And for rating purpose, I would like to tell you in advance. See, as far as rating is concerned, you said that number is around 60,000
SME
are rated. Here, actually, most of the banks have got a threshold of up to say 20, 25 crores, 30 crores. Bigger banks have got bigger threshold. Up to that, they don't insist for. Yes. So not only SME and MSME, even small corporates are also not getting rated. So when I look forward a company who is supposed to give me more margin, I am not incentivized that they are getting rated and giving me lower margin. So that is like to some extent contradictory, but rating gives a lot of discipline. Yes, but rating gives a lot of discipline. Whenever we talk to borrower, when we pursue a borrower to get it rated, we always tell them that is a third party stamp on you that will be more trustworthy, and definitely you can have a better bargaining power. And that is how we also urge upon the small borrowers to get rated.
Right. That's really encouraging to hear, Mr. Majumdar. I think we believe that ratings absolutely can help in instilling financial discipline, which is ultimately going to help the whole financial ecosystem. I will move to Mr. Chari. So, Mr. Chari, I think, as we are discussing, that banks have always been the most important, facilitator for MSME credit. And the exposure has also grown. And I think what Mr. Majumdar also said is partly right, that probably the growth was faster just after COVID, but subsequently, sequentially, it might have slowed down a bit. So coming to your question, will private sector and foreign banks like DBS, what's the stance that you'd have on MSME lending? Is there going to be a significant step up? I read about the plans to double the SME book in India in 3 years. So if you can talk about the bank's policy on MSME lending.
Yeah, thanks a lot. So a couple of points. Actually, if one has to see the landscape, there is a lot of momentum in MSME credit across the board. And there is, what we see is there is space for everyone. Public sector banks have their own space. Private sector banks, it's a growing space actually. There is also a large NBFI space, and something that you also covered in your presentation. The reason for this is, one is formalization led by GST. So formalization of economy is actually creating more eligible borrowers, which weren't there before. So that is one. Second is this whole aspect about public infrastructure where data is so seamlessly available has made the entire underwriting extremely seamless. fast, and digital. So all of that would mean that today you have a larger eligible pool of borrowers who can potentially get credit, and every institution is trying to put a game plan around it, I would say.
Correct.
So that's a positive news for the entire industry. I would say
More conducive funding environment.
it's a very conducive funding environment that has been created over the last 5-6 years, and now I think almost all institutions participating in this industry is reaping the benefit of it. So that's point number one. So we are a foreign bank, but our nature is a bit different in the sense that we are the only two foreign banks in the country who are fully subsidized in India.
Correct.
So we have a local board, we are locally incorporated, and one of the reasons why we chose that path was to expand our consumer and SME business, because subsidization enables us to put the distribution, which wasn't the case when we were a branch. So from 12 branches, when we were a branch, we moved up to 36 branches, and then we did an acquisition of Lakshmi Vilas Bank, and from then on, we've now a 500 branch bank.
Right.
And essentially, what we are doing is that we are taking SME or SME offering to this expanded footprint, and we are trying to do SME loans in a digitized way in this expanded geography. We were also at the bank way back 5 years ago, tried to use alternate data points to underwrite credit for MSME. Because
Right.
one of the issues that we identified very early was about the fact that there was a lot of information. So to the point that Natalie made, a lot of reliance on security, a lot of information requirement, and the process was quite long. So what we tried to do was we said, look at independent sources of information so the SMEs don't have to produce a lot themselves. So that
Right.
can cut down the information ask. Look at cash flow based financing if you can, which could also enable you to reduce your reliance on collateral. And third bit is make the entire journey digital, which would mean that you're able to turn it around faster. So we
Right.
took that route way back in 2019-20, and since then I think we've been quite steady at it. In fact, in 2020 we actually started a program where we could lend up to 5 crores for a 25 crore MSME without financials, and we were the
Okay.
first bank to actually get started on that. And that piece of book is still growing, and the quality of the book is quite good.
The policy is without financials up to
Without
5
financial. So we were looking at bank statements
Interesting.
then. Now we look at a combo of bank statement and GST
Okay.
to appraise, and also we take a look at bureau, commercial bureau, CMR, all of these. So it's a combination, it's a scorecard based model, but essentially what it did was it cut the requirement of too much of information to be taken from the SME, and relied on independently fetched data points. So that enabled us to take this offering to micro and small, and then we kind of layered cash flow based financing on top of it. So that's been our journey so far. So from a bank standpoint, I think it's going to be a focus area for us. It's a growth
Right.
department within the bank. We are quite bullish about the segment. The credit behavior of the segment has improved over time. There are innovative ways to finance today. It's not the traditional working capital, which is supported by property that used to happen. Now there is discounting platforms, there is threads, there
Correct.
are so many ways you could kind of support credit for MSMEs, and there are so many institutions which is playing the ecosystem. So all in all, I think it's great for the MSME, and I don't think any MSME will have a credit availability issue if he's in the formal sector.
Right. Right. Understood. I will come back to you later. So I will move to Shankar Chakravarti. Shankar, you have very closely looked at MSMEs, over the last 10 years. And while, as we discussed, we saw a very healthy growth in credit, but there is, as also what Natalie alluded to, that there is still, it is less than what the expectations are from the MSMEs. So even now, the MSME credit, as I mentioned, is less than 10% of GDP. So in your opinion, what are the major policy, kind of measures, transformational measures that's necessary to reduce this financing gap?
Right. I think one of the major problem, as obviously everyone else has explained, is over-dependence on the audited financials. And obviously a large number of these MSMEs cannot provide such detailed data. The good thing that has happened in the last 3-4 years is that you have a lot of alternate data which is available for underwriting, which includes GST, which includes EPFO data.
Mr. Chari just alluded to that. Yes,
Yes.
absolutely.
So and so therefore the right way forward is further emphasis on digital lending. But while we move to digital lending, we also have to keep in mind that the inequality in using digital platforms is very high with the when you compare the mid-size SMEs with the micro or nano SMEs. Many of them may not have access to smartphones or laptops or internets or stuff. So so we have to during the transitional phase, we have to provide both. So we are seeing a lot of digital lenders which is doing very well, but I think the public sector banks has to play a very important role in the last mile connectivity for the very small and non-digital SMEs, digitally enabled SMEs. So that is one aspect. The other concern that I have is that even the relatively larger SMEs and more organized SMEs don't get loan very easily. Now, while you look at these small hawkers, roadside vendors, and small shops, for them, it is understandable that borrowing is a problem, but it is actually a little baffling to see that a mid-sized company with a requirement of 20, 30, 40 crores sometimes finds it very difficult to get a loan. So this is an area which I would say that policymakers and bankers are not adequately aware about this problem. I feel that this segment is very important because this segment eventually has the potential to grow to a larger company. Somebody spoke before us about Indian SMEs going global, which is what is not happening. So a lot of attention has to be paid to this segment where they are relatively large. Now, if I look at why, I think Mr. Majumdar had mentioned that banks are not insisting on rating for borrowers below, say, 50 crores, or depending on the size of the bank, maybe in some cases below 25 crores. Now, we know why these banks are not insisting. One reason is that under the bank loan rating or bond rating scale, which is AAA to D scale, the smaller companies are not likely to get a good rating, and therefore the capital cost for the bank goes up. And therefore, this avoidance of getting this rating has emerged in the last 4 or 5 years. But we need to also understand that if we abandon the concept of rating altogether, you are basically going to lend on the basis of historical data. And if you look at a smaller company, SME, and if you look at past data, you really have no reason to give them a significantly higher credit exposure, right? So you will always be worried, and that's where the overlay of future outlook of how the company is likely to perform, how the industry is performing, how the
economy.
So that overlay is really required for this segment, which I think is a big flaw that has developed in the last 3-4 years. While we have the digital platform, we have CMR, we have FitScore, we have various kinds of things, which is fantastic for the nano and micro sized companies. But if the moment you go a little above, and these companies can really, you have this Pareto rule for employment generation or exports, you have slightly larger SMEs and medium-sized companies, contributing 80% of all the statistics. So therefore, this segment needs special attention. And I think we need to really use this overlay of future outlook and industry outlook and stuff to underwrite these kind of segments.
Absolutely. Thank you. I will just quickly move back to Mr. Chari. I understand that he also has to leave for some other meeting. So, Mr. Chari, I think how has Shankar talked about technology? I think digital lending is presently proving to be very, very effective, not just for simple retail lending, but also for MSME lending, particularly for small businesses. So, how do you see how it has evolved? The technology for bank lending to MSMEs. And for example, do you believe that things like, for example, co-lending that we see being pursued by some banks and NBFCs, that can also help in kind of facilitating growth?
So, the one fundamental aspect about digital is that data fetch, which is done independently, has enormously helped the underwriting process. So
Sure.
digital underwriting over the last 5 years, 6 years, the evolution, and there has been a lot of fintechs ecosystem that kind of evolved around it as well, who support the banks in terms of data, banks and the NBFIs in terms
Right.
of curation of data, etc. But you could today put a scorecard, pick the data independently, appraise, and potentially get back to an MSME possibly in 24 hours time, if all data and all applications is filled in to the extent the lending institutions want it to be filled. So that's a massive change than what we were used to a decade prior. So that is all enabled through digital, and digital and a combination of infrastructure put in by the government. So you could use bureau data, you could use bank statement, account aggregator enable
Information available in public.
You can have fraud check. You could do everything digitally, and that is where I think we've scaled up quite a bit. So that's essentially one use case of digital. The second use case of digital is that the customer today also wants to get service digitally. There are very few customers, even in the MSME space, would need a branch or would have to go to the branch. Till such time you have a application which is quite interactive and is able to connect to the customer and is user friendly. Customers today don't want to have a physical outreach. They're quite happy dealing with the bank digitally. So the front end also gets digital because of this. And I think that's a bit of a game changer, both in terms of credit delivery, also in terms of reaching out to the larger SME, which was the case, a problem statement before. The last bit that I would like to kind of call is that even the monitoring some of these credits is being done digitally today. So you put surveillance systems in your digital data pool. You look at MSMEs, you look at their bureau scores, you look at trending of their bureau scores. So some of those enables you to monitor those credits, which means that you are able to take, firstly, higher bite sizes. You are able to decision faster. You are able to look at a trend, sales trend through GST or bank statement, and support MSMEs when they really require liquidity. If one has to look back a decade prior, if there is a cyclical business or there is a pre-festive credit requirement for an MSME, by the time the banks were able to process it, the festive season would actually pass, and the MSMEs won't get the benefit. Now, because of digital infrastructure and digital methods of underwriting and data availability, that's pretty much possible now. So I think this digital revolution around MSME credit has been phenomenal, and I think that is what is leading the growth for MSME credit, is the way I see it.
Right. Just a small additional question. Do you see that all this digital lending that, let's say, not just DBS, but other banks have been undertaking, the health of that portfolio, or that's still coming to be very robust? Or is there some kind of tweaking or something that needs to be done? Or is it that the banking system is happy with the kind of portfolio that's generated digitally?
I would say, and observer banking colleagues that I talk to, and also can talk about DPS, I would say, in fact, it is better. It's better because of access to real-time data. So
Right.
if a MSME is willing to share his GST filing or returns data,
Correct.
you get real-time data versus what used to get a data which was 1 year old from a financial perspective.
Correct. Every month business, yeah.
Yeah, every month business you get a sense about how he's scaling, what times of the year he does more business, what times of the year it's a bit
Yes.
sluggish, where the money is getting used. You can potentially look at his sales data, and you can look at his working capital utilization, and you can build some sync on it. So I think the diversion risk can be eliminated. You can monitor them more closely and more instantaneously. And what this does is your reliance on security or collateral over time will come off. Because of the fact that you have monitorables available, you are able
Right.
to move away from a collateral-based model to a more cash flow-based model. And in DPS, we actually have done that. We started with bank statement, we moved to GST, we realized that GST is more real time. And since it's more real time, our reliance on collateral on GST-based lending is actually lesser than a bank statement-based lending. And you give the benefit back to the MSME. Firstly, is completely formalized because of the fact that he's filing returns. Second is you get to know data real time. So it's actually a better situation than situation being worse by embracing digital strategies, both on underwriting and monitoring.
Great. Thank you, Mr. Chari. I will move again back to Natalie. Natalie, you talked about your survey and how India compares with some other developing economies. The first question I have now is that, do you believe that there are some concerns on the asset quality in the MSME sector at this point in time? Can it have some impact, on financial stability, or it is still quite healthy at this point?
Yeah, thank you for this question. We actually loans as a share are indeed higher than the overall for both banks and non-bank finance companies. I mean, this is the case for many countries. So we do not currently have a concern for financial stability. It does need to be monitored closely as the credit grows for MSMEs. Something that we observed during our mission in India was that there are specific segments within the MSME credit that have higher than the average NPLs. And for example, this includes unsecured loans under public schemes, such as the PMMY scheme. And these have higher NPLs. And since they also are used for new to credit borrowers and for smaller loan amounts, caution needs to be taken to ensure that there are enough incentives for repayment, especially for the new to credit borrowers, so that they do not tarnish their credit records from the very beginning. So we are concerned, but right now it's not from the financial stability perspective. It's mostly from the financial inclusion as well as consumer protection perspective, that these people remain bankable as they're entering the banking sector.
Right. So no major concerns right now, but it's kind of a monitorable, obviously, as the exposure of MSME increases. Just last point is, any one or two measures that you believe the policy makers, the government, the Reserve Bank of India needs to take to kind of strengthen the access to finance? Any specific measures that you believe may be helpful?
Actually, we have quite a lot. And it has to be a solution that comprises many different parts. And then the colleagues in the panel have already mentioned several, and I just want to reiterate some of them. So again, the credit for MSMEs in India remains very bank-centric, and it should be more balanced. I mean, in other countries too, we see that banks are the predominant financiers for MSMEs, but this should be more balanced towards other modes of financing. And I was very surprised that asset-based financing, including factoring and leasing are actually quite underdeveloped in India. And authorities should definitely support the development of these. And there are many ways of doing that, including through the TREDs as well. The digital lending efforts that have been mentioned through higher digitalization and interchange of the exchange of the data is also support. You mentioned also briefly the co-lending. I think this represents a very good opportunity, and it has been proven very beneficial. And I think there has to be more regulatory clarity on which activities it should be used so that it can be further actually expanded. And finally, I want to mention the key role that should be played by SIDBI and the credit guarantee schemes. SIDBI, of course, has taken enormous initiatives in the last few years, and we also use it as an example. We present to other countries, we talk about what SIDBI is doing in India. So I think it should be further leveraged. And we do see that there is a problem, for example, of growth for NBFCs that cater to MSMEs. They don't have access to capital. And this is a place where SIDBI can actually really support in a greater manner by, for example, offering credit enhancement from NBFC loans from banks or securitization of MSME loans by NBFCs. So these are just some ways to leverage the scale of SIDBI. As well, guarantees that were mentioned before, this is a very powerful tool. And I think most of the banks seem to be projecting a much higher use of the instrument going forward. And I would say that we do need to achieve more scale there, but within the context of financial sustainability of these schemes, within proper risk management and oversight, as well as monitoring and evaluation of the impact. And the last point I wanted to mention is that I don't think was brought up as much was there is an enabling environment that there are some areas to improve, like in the issue of insolvency, secure transaction, as well credit information system. These are things that were mentioned in the G20 principles for SME financing. And while India has put the building blocks in place, there's still potential to deepen this market infrastructure to support a faster, a deeper MSME credit market.
Thank you so much, Natalie. I think that was very, very useful. Backstop arrangements, as you mentioned, can be very effective, as Mr. Tyagi from SIDBI also mentioned. It has been very successful so far. That's something that can be thought about as we go forward. My next question to Mr. Majumdar is on same lines. I think SME asset quality, which is something I think as a CRO you must be having an outlook on. How do you see the asset quality at this point in time? Do you believe there can be a stress going forward, or as the economy grows, because we're expecting the Indian economy to grow by around 7%, that's RBI's number of 7.2 for FY25. So do you think the stress is going to gradually moderate? What's the outlook you have on the MSME health?
Yeah, of course, the MSME will be getting its due share in this projected growth of India. And as far as our outlook is concerned and our asset quality is concerned, what we found post COVID in 2021, our credit ratio was very low. Now credit ratio in 2023 is very high. So that improvement we have seen, and that is acting as an alternative to external rating. Okay, because we have also incorporated a lot of factors to judge their.
Right. You mean the internal ratings are improving?
Internal rating is improving significantly year after year. But
Right.
what we are finding that MSME units are mostly partnership, or some of them are private limited companies. But there the debt burden is going up. The debt equity ratio is going up. So they are becoming more dependent on debt, and corresponding equity infusion is not there. That is what we are feeling, one of the stress which will be coming. But as we are concerned, we are carefully seeing that we are doing the assessment. Although cash flow based assessment is there, and other related areas also we are seeing to see that the model through which we are financing this MSME sector should be sustainable, as Natalia said. It has to be sustainable, because our ultimate objective is these companies to stay, to grow, and to contribute in a bigger way to the economy. So that way it is there. And from our side, for adapting digitization, what we have done, we are the only bank in partnership with RBI's Innovation Hub. We have introduced a product where we are financing the self-help groups through a digital mode. So they are opening account with us. Yes, and all the SHG members are getting their loan amount credited online from the bank itself without any manual intervention, and they are getting an SMS. So through that process, we have also brought them within the digital fold, and it is a part of the, I can say, ESG implementation, indirect ESG implementation also. So that is how I think from our side, quality is improving, and whatever delinquencies we are seeing in our risk appetite, that is factored. So that is why our growth will be sustainable growth.
Okay. Okay. Just one last question on co-lending. I mean, this is something that we hear from many of the banks, that they are looking at co-lending in a big way, a collaboration, a partnership with NBFCs, so sharing of risk. You see that happening for Canara Bank also, or is it something?
But yes, but we are doing co-lending, but in our terms, because sometimes some players we are seeing the underlying asset is not that quality asset. So we are strictly doing as per our terms. Yes, we are selective, and definitely that gives a different kind of doubt. That is why we are keeping our conditions, I mean, in the forefront. Without that, we are not onboarding them. So that way, we are going for co-lending in a very, very calibrated manner.
Okay. Thank you, Mr. Majumdar.
Thank you so much. Thank you all.
Yeah, I will move to the last question for Shankar. Shankar, I think finally we can talk about a little bit about SMERA and the role of, in the sense that what is the role of SME ratings in the current environment? Is it as we are saying that if there is a big digital trend, then is it all about data, or there is an important aspect of evaluating business industry outlook on what's happening in the industry, what's happening to the business, and kind of also looking at the future and being forward looking, and therefore assessing credit based on that? Is there a role that SME ratings can play in that? And how should policymakers and lenders start to look at ratings to make it more meaningful? Shankar?
Yeah. So, the most hard disclaimer statement, which is also most ignored disclaimer, which is past is not an indication of future, right? So we have all heard about it. I think the danger lies in believing that the past will always hold good. In smaller, very small micro and nano companies or nano entities, not companies, really these are merely entities. It is true that not much of a future assessment can be done. But where we have a entity which is in the organized segment, which is furnishing GST on time, taxes on time, they have a EPFO account, there is no reason to not be able to assess the future. Now, why future is very important, and which is where various kinds of forward-looking rating products will continue to be relevant, is because changes in the environment will always play a very, very important role in creditworthiness of companies. So if you look at these SMEs, they are already very vulnerable. We are aware about it. Their balance sheet size is small, and all the vagaries of the climate change or social issues, these things will continue to affect these entities. And in the popular discourse, this really never comes in the picture. Everybody is talking about digital. Actually, digital can also create a great inequality in a country like India, where if all banks talk about only digital lending, people who have access to digital infrastructure, only those people will get the loan, others will not. Whereas when we look at the larger companies, the underwriting methods really don't consider ESG factors, governance factors, and definitely climate-related factors, which is extremely important for Indian SMEs who are very, very susceptible. So I think this is where SME rating, and not just SME rating, but sustainability rating also can play a very important role for this segment.
Right. Absolutely. And that is where I think policymakers and lenders need to look at ratings from that perspective on how they can help to kind of forecast the future, and also kind of see the preparedness, especially in the current environment, the preparedness to manage ESG risk, as you rightly put. So with this, I think we can conclude the panel discussion. I will hand the thing over to Anthony for his concluding comments and vote of thanks.
Suman, there are a couple of
questions,
I think, but the questions may not be relevant for our platform, because the question is really to RBI. Now, no RBI representative is there, so I think we can take these questions offline.
Yeah. Anthony, is there any other question that we need to look into, or we can go for concluding comments?
I think we can move forward. There are no questions for the forum to respond to, as I see.
Right. I see some marketing.
Yeah. No.
Maybe this is.
I think that is a question for Sidbi.
Sidbi, unfortunately, Mr.
Satyagi had to leave. So we can skip that.
I think Hardik can note down this question and get a response from Sidbi, sourced and sent to this.
Sure.
Sent to the person who has asked this question.
Sure, definitely.
Yeah. So Tony, you want to kind of go ahead?
Yeah. So thank you, everyone. This brings us to the close of today's session. On behalf of SMERA Ratings and Equity Group, I would like to take this opportunity and thank Shri Ravi Tyagi, who has already moved on, our keynote speaker and panelist, Ms. Natalie Nicolau, Mr. Sudarshan Chari, Mr. Udar Shankar Majumdar, Shankar, and our moderator Suman. I also thank all our participants for joining this webinar and making this event a great success. You all have been a great audience. Once again, thank you everyone for joining us for the Indian MSME sector opportunities and challenges for the next 5 years. You all are an important part of Equity Group now. We can be reached on 99698 9800 or info@smera.in. We also request you to follow us on LinkedIn and stay updated for all such exciting events and for getting the latest insights on MSME sector. Thank you so much. Have a great evening ahead. Goodbye.
Thank you, everyone.
Thank you very much.
Thanks.